So, it was one of those days in the Asian markets, almost everything was seeing red, thanks to some renewed global tensions. But, and this is the cool part, one market didn't just survive, it actually thrived. We're going to unpack this really fascinating story of a widespread downturn and one very surprising exception. And this chart, well, this gets right to the heart of the puzzle. Just look at this. Japan's Nikkei, down. China's CSI 300, also down. But then you've got South Korea's Kospi, which is actually up. So what on earth was going on? How did one market completely zig when everyone else zagged? Let's break it down. Okay, so first things first, let's set the scene. The overall feeling across Asia was, well, not great. The trading day kicked off with a pretty negative signal from Wall Street, which had seen its own set of declines. You know how it is. That created this ripple effect, setting a really nervous tone from the moment the opening bells rang. But the real weight on the markets wasn't just some hangover from Wall Street. Oh no, it was something much bigger. The primary reason for all this anxiety was the return of an old ghost, simmering trade friction between the United States and China. I want you to think of the market like a totally calm pond for a second. Well, the news of a new trade standoff, that was like a big stone dropped right into the middle of it. And this wasn't just some background noise. It was the main event that absolutely spooked investors across the whole region. And this whole thing was definitely not a one-way street. Reports were coming out that the Trump administration was thinking about restricting high-tech exports to China. We're talking laptops, even jet engines. But this was a direct response to what Beijing was doing with its own restrictions on rare earth minerals. It's just a classic high-stakes game of tit for tat. But here's a super important piece of context that came from a Reuters report. It looks like these moves aren't set in stone just yet. They might just be a bit of strategic posturing, using it as leverage for talks. The problem is, for the markets, which absolutely hate uncertainty, the threat of something happening is often just as damaging as the thing itself. So, the stone was dropped into the pond. Now, let's trace those ripples. This geopolitical tension didn't just stay in the headlines. It hit the trading floors, and it hit them hard, especially in the big economic powerhouses like China and Japan. And you can really see the impact in the raw numbers. China's big blue-chip index, the CSI 300, it fell by 0.6%. Meanwhile, Japan's Nikkei 225 saw an even bigger drop of 1.3%. We're talking billions of dollars in value, all because of the fear of this trade war getting worse. But, over in Japan, it wasn't just about the US-China drama. There was actually another factor in the mix that made their situation a little bit different. This timeline really puts it all into perspective. Japan's Nikkei had literally just hit a record high earlier in the week. So when this bad news about trade tensions landed, a lot of investors just saw it as the perfect excuse to sell their shares and lock in all those nice profits they'd just made. It was really a mix of new fears and some good old-fashioned profit-taking. And now we get to the big twist in our story. In the middle of this whole sea of red, South Korea just stood there like a rock against the tide. While all of its neighbors were tumbling, its market was actually climbing. So this brings us right back to our big question. What was South Korea's secret sauce? How in the world did it manage to shield itself from this widespread panic and actually chart its own positive course? The answer, believe it or not, comes down to this one number, 2.5%. That was the key interest rate. And the Bank of Korea decided to hold it steady. This single decision, a domestic policy choice, was powerful enough to outweigh all that negative pressure from around the globe. So let's break down this winning formula, right? By keeping that rate steady for the third meeting in a row, the central bank sent this incredibly powerful message. Hey, we are all about stability right now. And that signal was exactly what investors needed to hear. It totally boosted confidence, it calmed nerves, and it pushed the SPI index up 0.3% to a brand new record high. Amazing. And this, right here, is the key takeaway. It's such a powerful reminder that even though global events are hugely influential, they aren't everything. A strong, predictable local policy can act like a firewall, It can protect a domestic market from all that international turmoil. So, after a day with so many conflicting signals, where does everyone look next? Well, the focus is now shifting away from today's trade drama and onto the next big piece of economic data that's on the calendar. And that piece of data is the CPI, the Consumer Price Index. For anyone who's not familiar, this is basically the most watched number for inflation. It tells us how fast the prices of everyday stuff, goods and services, are going up, and it has a huge influence on what central banks decide to do. Right now, literally all eyes are on the upcoming CPI numbers from the United States. This data is going to be a massive clue about what the Federal Reserve might do with interest rates at its next meeting, and you better believe that decision will send ripples across the entire global economy. Which kind of leaves us with the final question, doesn't it? Today showed us a market completely torn between global fear and local confidence. So as this new inflation data gets closer, are we going to see a return to some kind of stability? Or is this just the beginning of a whole new round of turmoil? I guess we'll all have to wait and see.